Memory stocks are crashing, semiconductors are down by more than 20% in just 2 days, and there is immense fear that we've reached the top of the market and it's only down from here. And to be honest, people are extremely worried that they're about to lose even more money when the stock market opens next week. But the problem from my perspective is this: there just seems to be a fundamental disconnect between the reality of what is happening and people's understanding of how to read the news. And to be honest, I think people are forgetting something very important. Okay, so if we look at the screen now, we can see that SanDisk stock has been down over the course of the last 5 days by about 19.5%, almost 20%. And it's been pretty catastrophic. I mean, they were pretty flat over the course of most of the week until the 30th of June, where things started falling apart. Micron, similarly, not as bad, but about down by almost 15% over the course of the week. The interesting thing about this is it happened only a week after Micron reported record-breaking margins and profitability, and an outlook that was pretty positive for the semiconductor market. So why has this happened? So it all starts with Mark Zuckerberg, obviously. It came out recently in a report from Bloomberg, which was reported on by Wall Street Journal too, that in actual fact, Meta had plans to build cloud infrastructure and sell it. Meta platform shares had their best day since January after Bloomberg reported that the Facebook parent will sell access to AI computing power and models similar to those offered by Amazon, Microsoft, and Google. Meta shares rose 8.8% Wednesday, down slightly from a higher of more than 11% hit this morning. The company was third best performer in the S&P 500, and this was reported on July the 1st. Now that report and the market's reaction is interesting for a few reasons. First and foremost, it tells us the market is willing to reward the hyperscalers if they actually begin to hint that they're going to not invest in the data centers as much as they said they were. Essentially, Mark Zuckerberg, at least from this article, is suggesting that it's more profitable to sell the hardware than it is to actually buy it and run models. But secondly, it also tells us that maybe we've reached the peak of the market, and that in actual fact, the semiconductor stocks that many of us are invested in might have reached their peak and prices might start to come down. But I think they've got it all wrong. Mark Zuckerberg has said this before. If you look at this article here, you can see it for yourself. Mark Zuckerberg says a Meta cloud computing business definitely on the table. Now, when was this published? May 27th, 2026. This is not new news to Mark Zuckerberg. He has been saying this for a little while. Now, if we look at the bullet points of this article, Meta CEO Mark Zuckerberg said his company could enter the cloud computing market if it overspends on data centers and has excess capacity. Now, that's a worry, but we'll get to that in a second. It's definitely on the table, Zuckerberg said at Meta's annual shareholders meeting, in response to a question about the companies potentially competing with Amazon and Microsoft in cloud. Of the 4 US hyperscalers, Meta is the only one that doesn't sell cloud infrastructure. The interesting thing is that it doesn't seem like Meta have too much capacity. It feels like they don't have enough. If we look at this article, for example, Google caps Meta's use of Gemini AI, Financial Times reports. It goes on to say that Google has placed limits on Meta's Platforms Inc.'s use of its Gemini artificial models because it could not provide as much computer capacity as the social media company wanted, according to the Financial Times. In the latest sign of AI infrastructure constraints, Alphabet search giant has enforced restrictions on several clients, with Meta particularly affected. So if Meta are relying on Gemini and Google's infrastructure to be able to run Gemini's AI to place ads better and more efficiently, why would they then be using their own compute capacity and be selling it? Now, that's a strange one. To me, it doesn't seem like it makes much sense. It's also important that we recognize that Meta have also had agreements with some of the neo cloud providers to have extra capacity, and they signed those only a couple of months ago. For instance, here they signed a $27 billion 5-year AI infrastructure agreement with NBIS. So you tell me whether that makes much sense to you. Do they have overcapacity? Now, if the argument was that they just want to use some of that spare capacity that they've built slowly just to rent it out and offset the cost that they've already incurred as they build out their own AI model, which is pretty poor, then it makes sense. But that doesn't mean that there's too much capacity. It just means that Facebook are pretty bad at deploying it, in my opinion. The thing is that the market got spooked by this announcement and assumed that by the end of July, when these companies have their quarterly announcements and results, that they guide lower capex spending on data centers. And that scared a lot of people. But the problem is that the reality says something different. Remember, Google only recently said that they were seeking $80 billion for an AI build-out and had an agreement with Berkshire to sell about $10 billion of their stake to it. Google parent Alphabet on Monday announced a plan to issue $80 billion in equity to finance enormous capital expenditures tied to the artificial intelligence race. But they're not the only ones, of course. We've also got Amazon. Amazon secured $17.5 billion loan facility amid AI-driven capex round June 10th. Of course, Elon Musk only recently raised $75 billion in his IPO. So evidently, there isn't this massive capex fall off. If anything, it's going to continue to grow. So the market has seen one company with one of the worst AI models in existence say that they might sell their excess compute. But in actual fact, they've been doing the complete opposite, and they've actually been building compute, and they've actually been trying to get more and more. So I don't think it's exactly as people think. But the fall of about 20% in 3 days is a correction. But why was it so large given that this is all old news and it's pretty obvious news? Well, to be honest, there's one thing we need to take into consideration. Stocks that grow enormously in such a short period of time tend to have a lot of tourist investors, people who see the momentum, see the enormous wealth some people are making online. They look at their neighbors, they're buying new cars, they're buying a lovely new suit or a house or a watch, and they say, why am I not making that sort of money? And they all pile into the same stock. The problem is with those people is that they haven't got a significant thesis as to why they're invested in that company. They've not got conviction in that trade. So when information comes out that might concern them, and it's concerning people online, like for instance, Meta saying they might have too much capacity, they're the first ones to go, and they rapidly begin tumbling. They see their stocks go down when they've invested at the highs, going down by about 10%. They all begin to flee at once. And that's basically what we're seeing. It's just a shakeout, in my opinion. I don't think the fundamental reality of the AI scene, the AI build out, and where we're going in the future is representative of what Meta is saying or the performance of these stocks. In my mind, a lot of this is over the top. You've also got to remember there's also a lot of investors who got into these trades really early on. I'm talking between September 2025 and sort of February 26, and are up an enormous amount of money. And when they see these sort of bits of news come out, they think, oh, maybe we have actually reached a peak. Maybe it's time just to actually tie it back a little bit and take my profits. And that's fair enough. You've just got to remember there's a lot of people who are in different positions for different reasons with different levels of conviction. And that's what you're seeing really at play when news like this comes out and it triggers a bit of a demand and supply imbalance triggered by fear. So that really begs the question then, what is the memory market actually like then at the moment? Well, as I was making this video, the news broke that Samsung would be increasing their DRAM prices by over 20% in Q3 after hiking by 90% in Q1 and 50 to 60% in Q2. So clearly there is no signs that there's going to be any reduction in prices. And you can't forget that Micron had these amazing results only a couple of weeks ago, where revenue reached $41 billion versus $23 billion in the prior quarter and $9.3 billion in the same period last year. An enormous increase with margins going through the roof. But there are worries, of course. The massive price hikes have caused people to begin looking around for alternatives. And that's what we're seeing with Apple. But given all that news, haven't Apple been lobbying the government to access Chinese memory because of the prices have been just so astronomically high for them? Yeah, that is true. Apple to raise prices due to memory chip crunch, Tim Cook says. The CEO tells the Journal in an exclusive interview that the soaring costs make price increases unavoidable, which obviously made Apple very, very unhappy. Now, as a result, Apple seeks to buy Chinese-made memory chips by lobbying the US government. Apple is in negotiation to purchase chips from 2 Chinese semiconductor makers on a Pentagon blacklist to help reduce the impact of a global memory shortage that forced the company to raise prices across its product line. Now, that's quite funny to me, just simply because Apple are one of those producers who have been putting enormous pressure on memory providers like Micron for years, forcing them into smaller and smaller margins, so much so that the whole memory industry had been obliterated for years and had to consolidate just to survive the onslaught of demand and pricing pressure. Now that the Microns of the world are the ones with the scarce goods, Apple hate the fact that they are being pushed into doing something they don't like. And I think that's interesting. But taking a step back before we get really worried about this, currently Chinese memory is extremely difficult to get a hold of, especially if you're an American business, because of Section 1260H, which pretty much makes it impossible to import memory from China. And also, Chinese wafer production isn't actually that significant in comparison to global wafer production, which is they're about 8% of the market, which, let's be frank, is a nice additional supply, but the Chinese own demand is going to take up all of that supply. So there isn't really enough for the world. Now, while it is true that China is coming for Micron's thick margins, it's also worth remembering that the memory supply chain currently lacks capacity to meet hyperscale demand. And in fact, China just does not have the capacity needed to be able to make a dent in this world at the moment. What we also need to remember is that the United States of America and China are fighting against each other in the who can build the most powerful AI industry the quickest. Now, if Donald Trump or the US government allow Apple and allow US competitors to be able to access Chinese memory simply because pricing pressure, well, all you're doing is you're providing China the ability to expand their own operations quickly. And as we know from the past, that means that China can reiterate, they can make profit off of the US businesses, and they'll expand enormously at the disadvantage of the US AI models. So essentially then there is all this enormous amount of positive news for the trade, for the memory trade, which is counterfactual to the actual oversupply worry that meant people sold the stock. So does this mean the stock is going to hit new highs next week? Well, of course it doesn't. It just means that all the catalysts that lead to the growth that's happened so far doesn't look like it's slowing down. And we haven't seen the sort of news that would get me worried to start thinking, all right, maybe I need to think about reducing my size of my position, or maybe it's time to actually get out. When that happens, I'll be the first to say it. But I don't think we're seeing that yet. I think the AI play is a big one. And I think we have to have conversations about who's going to be the winners. But right now, it's clear to me that the gold mine is memory, and that's where it will be for quite a while. Anyway, thanks for watching. If you enjoyed the video, please give the video a like. I'll see you in the next video. Bye for now.